Thank you for joining me. I'm Alex, and I want to talk about Take-Two. So, Take-Two makes computer games. They have some amazing titles like GTA. So they own Rockstar Games, which develops GTA. They also own a few other studios, and obviously that's kind of how it works with most things like, Blizzard and Activision and a lot of other things. So current price is $164, which gives them a market cap of $19 billion, and obviously a boost of 3% when the Nasdaq is down 3% is a huge growth. Huge growth. Dividend is 0. I don't expect that to change in any time frame I care about. Revenue $3.1 billion, earnings $404 million. Their current PE is 42 with a forward PE of 44. Obviously, kind of high. And I don't think there's really enough revenue growth to justify a PE of 42, let alone 44. 10%-ish growth, you can get that in a lot of companies with a PE of 20. Total assets $4.9 billion, total liabilities $2.4 billion, which gives them a total stockholders' equity of $2.5 billion. I like this balance sheet. It's almost the perfect ratio of assets to liabilities. Definitely don't have a problem with the balance sheet. Obviously, the stockholders' equity being so much lower than the market cap is kind of a problem for me, but overall, very nice balance sheet. Decent revenue growth. Obviously, not a fan of no dividend at all, but obviously that doesn't really make a difference. If you think that you can invest a dividend better than the company can invest the money that they don't pay, then dividend makes sense. Obviously, you want to buy companies where you think that they can invest the money better than you can. But, overall, obviously, for a growth investor, I don't think that there's quite enough growth here. Obviously, PS5 and Xbox have been released or have been available for pre-purchase. So it might be a very good year for video games this year and possibly next year. But there's also the problem with the global pandemic and a lot of people out of work. But the whole lot of people out of work thing is more of a US-centric problem than the rest of the world problem, because the rest of the world seems to pay the people who are out of work because of COVID very well. Like some pay 80% of their income. So the US market is significant, but not overwhelming. So the consoles and the games being sold worldwide obviously overshadows what's happening in the US. So overall, I am expecting the year to be very good for Take-Two and for other games manufacturers. So again, for a growth investor, I don't think there's enough growth here, despite the good year that we're going to have, probably. For a dividend investor, there's obviously nothing there at all. And for a value investor, I don't think that you can justify buying a PE of 42. The balance sheet is really nice. The revenue growth is decent, but the valuation is just too high at this point. So I think that there's many other companies that are better buy right now. And as such, I wouldn't buy Take-Two for this price right now. For half the price, I would gladly give them money. That's it for me for today. If you like this video, make sure to subscribe. I'm putting out more videos every day before market open. I hope you have a successful day.